Mr. Woolley, thanks for your time. Firstly, make us understand what reasons are being advanced by insurance companies for rejecting the claims related to COVID-19.
Thanks, Woolley. Good morning. So essentially the insurers are provide this cover. It's a specific product that they've developed for the tourism and hospitality industry, which gives an extension to your normal business interruption policy. Business interruption policies are there to pay for your staff salaries and wages, your overheads, your Eskom bills, water, rent, and all those sort of necessities. Obviously, if you're lucky enough to get some net profit. What we're finding is that the insurers are turning around and saying that, yes, whilst COVID-19 is present in the country and present within your radius or at your premises, they aren't interested in paying those claims because they believe that the government lockdown measures and the quarantine and restrictions that the government have imposed are driving the loss, not COVID-19. And for us, that's absolutely nonsensical, because without COVID-19, you would not have the restrictions.
Yeah. You represent about 400 policy holders, Ryan, and my understanding is that they are covered for something that is called business interruption claims. Surely then, they have a legal leg to stand on.
We believe so. We think that they definitely have merits in their case. We think that the insurers are trying to find a way out of these claims because they did not foresee the value of the claims. We think that they did not underwrite this properly, but they provided the cover. You know, one of the things that we've heard recently on other shows, that pandemics are something that was not anticipated and that, that could never be insured. We don't buy that. We think that, insurers measure risk all the time. The reinsurers have got some of the most advanced research facilities in the world. And when you look at the fact that SARS broke out as an epidemic in 2003, you've then had MERS, Ebola, you've had other instances like avian flu. They've all been around, and they've excluded specific things like AIDS, where they've said that those pandemics are excluded. They had every opportunity to exclude a pandemic, and they chose not to. So with the lieu of premiums, they've sucked in all these clients, and now they're not willing to pay their claims.
Final question to you, Ryan. You say in your statement that you have proven, you have knowledge that these insurers actually do have money to pay out these claims. That's what I want to ask you about then, to say, surely this kind of action that they are involved in by rejecting the claims, that should be accompanied by the most severe punishment. What are bodies like the Financial Services Conduct Authority saying?
The Financial Services Conduct Authority has been excellent. I had a meeting with them last week, Friday, where they laid out their plans in terms of what they intend doing to investigate this and to interact and engage with the insurers as well as the reinsurers to obviously put forward and analyze and see what they believe should have happened. We're working with them and providing them with insights that we've had into the FCA's approach in the UK, which I'm sure everybody's watching quite closely. So we think that the regulator has got a strong position to play in this, and we also believe that government should be looking at this. The tourism and hospitality sector is one of the lifebloods of the economy. They're a massive employer of the youth, 1.5 to 2 million jobs. You just can't remove this amount of funding without it having a consequence.
All right. Ryan Woolley, thank you very much for your time.